Hello again, traders. Right, this is a long overdue video, and it's something that has been bothering me for a little while now, and it became quite apparent during the week this week, where someone asked me what a three candle reversal is, a definition of it, and whether a pattern that he showed me, two candles, a green and a red candle. I won't go into the chart here, and you're only looking at this chart because it is a perfect example of what I was shown 20 years ago, and it has taken all those years to settle in, but or you know, realise that patterns 100 years ago, 20 years ago, or 2 years ago are all the same. Anyway, back to the point of this video, 3CR, and why I feel it's so important to talk about it right now, is that this person identified two candles. One was a upwards green candle, the other one was a red candle that closed below the green candle. So it was just two candles, and he said, what happens if the high, if it's a double top? Well, firstly, the high of the red candle was not actually higher than the green candle, and you have to go down to the last digit on the candles. So this is pretty much what he showed me, except the red candle come below the low of the green here. But the last digit on the so if you place your mouse there, you'll see the high of that candle is 8030, 1.18030. So if the high of the red candle was 1.80029, that would be one digit below, and it wouldn't be a double top. If it was 8031, let's have a look at that again. The high 30, the high was 31. It is one micro pip, if you like, above the high of the green candle, so it is not a double top. Simple as that. So I remember saying in the answer to him that you rarely get double tops, and it's true. That is how I was taught to look at candles, or I taught myself, should I say, because the 2B reversal was reliant upon a candle breaking the low of Vix Barandio's sort of trigger bar, if you like, and it was that precise. I watched it to that level of precision. So when they added 5 decimal points, they used to have 4 and 2s and that, this, that and the other. It then became even more sort of precision trading. So how is this relating to the whole point of this video? Well, what I wanted to say was that as time has gone by, things change. The 3CR in my head has changed, and this is so important to everybody now. We are getting all these different methods of trading, the strat with their candles, and the various other methods, SMC, smart money concept, and which I haven't studied in the least bit, and ICT haven't studied in the tiniest bit either. The strat I did, because it was a candlestick analysis. The other two, in my opinion, are swing analysis. So I'm really interested in candles. Couldn't care less about swings anymore. Not really anyway. Been there, done that, got the t-shirt. But what is really important now, in my opinion, for people that are playing with 3 or 4 or 5 different methods, and also trying to understand the 3 candle reversal 3CR method, is that line charts take precedence over wicks. Oh, and you've also got the fantastic Raja Banks, who used to be Wicks Don't Lie, who, in my opinion, is a fantastic trader, a really, really good teacher, one of the best in my opinion. But that doesn't mean that I'm affiliated to him or any of these other methods that you have online. I would suggest there's so much free stuff online now. You cannot shortcut yourself to trading. Doesn't matter how many live subscriptions, books you buy, courses you buy or whatever, or mentors you pay. I paid a mentor and it still took me 4 years after the mentor's courses to crack it, because trading isn't about the method so much as it is about overcoming your inner gremlins in your head. Anyway, I digress. So the point is, if you are studying 3CRs, and getting back to the original reason for making this video, those two candles, remember, and this guy saying on Twitter, asking me what that exactly was, do not get bogged down with all the little minute points of trading now, because you know, it's easy for me to say perhaps 4 or 5 years ago that that's candle 1, that's candle 2, the penultimate, ultimate, and you have to break and close below that, close below the low of the wick, and then as time gone by, the line chart has taken precedence over wicks. So the original 3CR is a good learning tool. Prior to that, the 2B and their extreme wick levels, if you like, of importance was a fantastic learning tool, and you can watch how price reacts to those precise wick levels of lows. But the line chart is, you know, this would be a low of a line chart here. If we switch to the line chart, you'll see it there. That's the close and open of the new candle, what I now call the battle zone, what James 16 used to call the PPZ, price pivot zone. Flip zone is another expression people use of price. That confluence of the close and the open is what is more important to me now. And what is even more important, is the higher time frames. So as you move from, say, for example, on the 30-minute time frame here, don't want to put too many lines on this because I intend to make a new video about this at some stage. But if you watch these levels, that one there, and let's put a new level on that one there. Important to remember that that's not relevant to this whole chart really. And then, so we've got these two together here and these lows, and then move up a higher time frame, you will find the important levels are actually this higher level here. The lower one has become redundant. Actually, it's important there, which is interesting. So interesting how this works. So if we go up another level, we may well have another level now. So we've gone from 30-minute to the hourly. Let's go to H4. Definitely a ton of H4 candles in here, so we should have a level to look at. And where is it? Where's it gone? Actually, we haven't really got a level to look at here and here. It's moved up a little bit higher. Let's just put the vertical on there so I remember where I am. Go back to H1. H1, that's that vertical there. So yeah, not a lot going on throughout this whole area here. Let's flick back to H4, and we can see that important level there. So the higher level again. So the reason being now, and that the relevance with the whole of this video is 3CR and 2B levels are more important to use your line chart 2B and your line chart 3CR, and then you can flick between the time frames and you will get a ton more information. So we can see that higher level there is more important on H1 and H4. There it is over there, this whole higher level, this top one of the highlighted two. And it then means that these lower levels are in fact less important. And what's really interesting, you know, and I don't mention this stuff because I try not to complicate stuff, you know. There is no shortcuts, as I've said, or there are no shortcuts. Unfortunately, screen time and watching the videos, my videos, over and over and deciding whether it's important to you or not, or whether I'm just talking a load of BS. But look at this also. Another reason for the interest at this level is we've bounced off this level, but we've failed to make a higher high. This was the last high, so we can already see, you know, by moving through the time frames and watching the different levels as they move up, as we move through the time frames, that the lower time frames are made, or the lower levels on the lower time frames, like this one here that has failed to create the new high, a bust above there, is less important. So it's hard to describe this stuff on individual videos and individual tweets, because you'd have to write a book on it really. And how do you go about splitting a book into chapters? I do not know. But so many different things, you know, divergence, classic divergence on this. It was on the M30. It's not so clear on the H1, but it is there. Not on the RSI, so once again you can see why I love the TMA. But if we go to M30, we could clearly draw a level between that high and the new high, and that high and no new high. Absolute clear divergence. That is why I love the TMA slope. So when I'm here watching this test the support and test the support again, and gradually making new highs but not making new highs there, I'm all over this like a rash, watching it for shorts. The ADR comes into its own there as well, although in this instance the ADR wasn't particularly average daily range. What you'd want to see is like 132 on the 10 days and 150 or 130 or 140, 150, whatever. That wasn't very descriptive of a reversal, but Friday is a good day for profit taking reversals, sorting their books out. If you're a big trader and you've made millions for the week, just grabbing your profits and running. So back to the 3CR, and this is the important thing. If you are new to what I do, or new to what everyone else does, all these other different methods, just be aware that if they tell you not to use indicators, keep an open mind. If they tell you the wicks are important, keep a massively open mind. If they tell you this this thing called an FVG or an MSS or whatever is just a new name for something that's been around for centuries. Support acts as resistance. Demand becomes supply. MSS, whatever that is, market structure switch or something. FVG, fair value gaps. You got wicks all over the place. Well, that's a gap. There's no wicks visible there. If you've got the wicks in, it just creates a problem. That is clear air. And guess what? When it broke below there, what did it do? It filled that clear air, came and tested it. Where's the wicks? There aren't any. So always keep an open mind, guys. And the whole point of this video, to summarize, is that the 3 candle reversal is a starting point, and as I always said, a 3CR is a statement of intent. That 3 candle reversal identified by Aaron's fantastic indicator, and I've just tweeted about this, that is suggesting that we may well be short, a new short opportunity, but do all the analysis at the same time. Lower time frame, higher time frame, ADRs. I've got the Bollingers set to the daily H4 and H1 on my charts as a quick guide to the direction of the day, because I'm messing around with robots and they're working really well actually. And then I've got the TMT daily candle. That is just the daily open was there and is pushed up. Now if that is full, it shows me, and big with no wicks, shows me if it's green and right up here with no wick, that I could be looking for a reversal. And then I check my Bollingers, ADRs, 3CRs on every time frame, all the other stuff, RSI. Everyone looks at my charts and thinks, oh my god, what an amateur. There's your Asian range. It's something that you have to teach yourself. That's the Asian low, that's the Asian high, just up there hiding behind that support and resistance indicator. Again, another indicator. But don't discount anything that anyone talks about. Just try to embrace it. And as a last note, and something else that's been talked about this week is, or literally today, is going for certain targets. Only trading an RR. Well, I know, and I've made it my business to understand what a lot of professional traders get up to, and I guarantee you, someone doesn't arrive at work on a Friday morning, and first thing he says, I'm looking for a trade with a 3 RR. He's just looking for a trade. He's looking to make his millions in minutes and then off to buy a bacon roll and a coffee. All of these traders, these ex-professional and professional traders that I've studied, they all have different methods, they all have different rules, of course they do. But they don't all look for 3-to-1 RR or just sit there on their hands watching fantastic trades go by. Read a tweet from another trader on another thread. Said, oh, he's not trading at all today, yet he watched price absolutely monster move. And there he was watching it, It's okay having strict rules to trade by, but make sure those rules allow you to actually trade. Otherwise, there's no point even being a trader, in my opinion. Anyway, I digress. Okay, guys, so the moral of this, 3CRs, keep yourself fluid. If you're using all the other methods, keep yourself fluid. Don't discount anything. Don't treat anything as red. Apologies if this may confuse some of the novice traders, but if you've got a few years under your belt, you'll understand exactly what I'm talking about. Closes of candles, aka line charts, are massively important. Wicks are very, very important too. Wick fills, an indication of what might happen to price. The only thing I can suggest you do is get ready for the hard slog of thousands and thousands of hours of screen time to unravel the secrets of the charts. Apologies for the rambling video, but it needed to be said. I feel better now that I've actually created it. So thanks for watching and have a wonderful weekend. It's Saturday and it's sunny.